Hey, what is up everyone? It's the random Asian dude on the internet here. Now, I was just minding my own business, writing a script on whether we are in a speculative asset bubble. And then it turns out that our newest inflation data between January to March for Australia is officially out. So I want to go through those data points with you and share my thoughts on it from a retail investor's point of view. In saying that, I created a video to help everyone understand the different types of inflation and also how we can prepare for it as a retail investor. So definitely check that video out after this one. Just a bit of housekeeping before I start. No, this video is not financial advice because I am just a random Asian dude that happened to pop up on your YouTube feed. So this is the ABC article that I read on the new inflation figures. I'll leave a link in the description box below if you want to read it for yourself. But there's a few things I want to highlight here. And the key point that you do need to know is that CPI have increased about 0.6% over the March quarter and 1.1% over the year to March 31st. I will talk about the other 2 points later in the video, but at least for the commercial banks raising rates, by now most of you would have already realized that. The first point I want to highlight is that it's not like there isn't inflation, there is inflation. So ABC reported on building costs offset by government subsidies, and this is essentially talking about a home builder in Perth, Frank, who have been building homes for the last 15 years. Now, this is where things get a little interesting. He essentially said that we've had some serious supply issues for general materials like bricks, cement, and even piping. And increased demand is pushing up prices for these materials, but he can't actually pass those costs on. So it's actually not showing up in the CPI. Well, these two paragraphs is essentially saying that they priced the jobs in last year in July and August, but within those contracts, there are no clauses to adjust for rise and fall of input costs. So essentially, Frank just had to eat those costs and lower his margins. But the difference between the costs is actually quite big. So if we scroll down a little bit, and then we'll look at the cost per brick. So he essentially said that to lay a brick, it used to be approximately $1.30 to $1.40 a brick. Now it's, well, if it's $2.50, then it's more than double, right? So I think this is an example where inflation does exist, but it's not showing itself in the CPI. At the same time, I'm very, very aware of my own confirmation bias, and I could be cherry picking facts to show you, right? I'm just trying to be open-minded and skeptical at the same time with what's being reported. So another really interesting part in the article is talking about rent rises not showing itself in the CPI. In this segment, they're saying that CoreLogic data shows rent rose in all capital cities in the March quarter with an average 3.2% jump nationally. There are many different reasons why I think rent doesn't show itself in the CPI. It could be potentially different cities offsetting each other with the increases and decreases. It could be homelessness. So there are plenty of different reasons. And one of the things that I like to do every so often is come to SQM Research. No, I'm not sponsored, relax. And I like to go to the weekly rents. So this is free data, by the way. And I just want to gauge whether the rent have been increasing. So from January for Perth housing, it's about $496, and now it's $522. Well, that's for April. So $508 for March. And for units, the increase is pretty steep as well. Darwin seems to have a bit of a decrease in terms of rent. So if you do live in Darwin, I would love to know if that is indeed the case. But if we look at Sydney and also Melbourne, it's pretty interesting in the sense that a lot of the price decrease have really came from demand shocks, where international students are potentially leaving the country, they're not coming back, so there might not be as many people renting. But nonetheless, the rent is still quite a bit, to be honest, $640. It really depends on where you're living. So for January, renting in Sydney costs, or for houses, costs about $642, and barely rose, to be honest. And in March is about $652. And there seems to be a slight upward trend for the apartments as well. For Melbourne, it's a different story. And January was $515 and April was about $510. So there seems to be a little bit of a decrease in terms of rent. So one of the last thing I want to point out about this article before we talk about how the markets have been responding to this news is that even though January and March inflation rate is relatively low, and I think that's probably mostly because of different grants, stimulus checks, so on and so forth, everything kind of coming to an end. I do think that April, May, and June, that's when we'll see a much clearer picture, essentially when the smoke clears and we can see what's happening in the economy. If we look at the historical inflation rate, it's incredibly low. We're barely touching 1%, and the target for the RBA is 2%. We have so much ground to make in order to be consistently at 2% for a period of time. We stretch it out even more. The inflation rate have barely touched 2% historically. So I don't really know how long it's going to take until the RBA does raise rates, but this is just a perspective to keep in mind of. Now, given the inflation news, of course the market is going to react to that. The ASX 200 have gained about 0.44%. The All Ordinaries, which is the top 500 companies in Australia by market cap, have gained about 0.34%. And the All Tech have gained about 0.31%. Now, out of the three, I was expecting the most reaction from All Tech, but it did seem like towards the end of the day, the bond yields have kind of came back a little bit. So that might have impacted All Tech. So if we stretch the timeline a little bit to 5 years, just so that we can see the pre-pandemic heights, the ASX 200, which is XJO, is almost back at pre-pandemic heights. And for All Tech, this has performed so well since the pandemic. I don't really know how much more upside is there for All Tech. Now, I want to show you something. It might be a little bit scary, but I think it's at least worthwhile paying attention to, right? So if you go to marketindex.com, not sponsored, and just go to market statistics, you'll come to this page. And for this page, if you scroll to the PE ratio part, now this is the PE ratio for All Ordinaries, which is the top 500 companies in Australia. The red dotted line is the average, which is approximately 15-ish. Now, if you look at the PE ratio for our top 500 companies, it's currently sitting at 77. And for me, the CAPE ratio for US is 37, and it's already pretty high. And to see our All Ordinaries at around 77 seems a bit exorbitant. So if we scroll down a little bit and look at earnings yield for the All Ordinaries, it's currently sitting at 1.3% for March 2021. Now, there are some comments that as we reopen our economy, the earnings should jump and the PE ratio should decrease to reflect the current situation. I'm not trying to scare you. I'm just trying to at least bring some awareness to how highly valued is pockets of the market at the moment. Now, the last thing I want to talk about before I give some final comments on the inflation rate is the specific line items in the CPI. Now, we already know that CPI have rose about 0.6% this year. Over the last 12 months to the March 2021 quarter, CPI rose about 1.1%. And the most significant price rise was automotive fuel by 8.7%. I definitely could feel that just because I live very, very close to a petrol station and I could see the jump in terms of petrol prices. And the most significant price fall was furniture, which is interesting. I wonder how Temple & Webster is doing currently. Okay, so if you just scroll down a little bit, we can look at some more specific data. Now, the two most interesting columns to me are these two columns right here. So the specific line items and also on the quarter-on-quarter change. Food and non-alcoholic beverage, that's boring, so I'm not going to comment on it. Alcohol and tobacco is really interesting to me because I used to consult for an alcohol store on their digital strategy. So for December quarter, it's generally a high demand season because it seems like everyone just want to get drunk. And when you move into the new year, what I found is that people have New Year resolutions and they tend to try to get rid of bad habits. So it does make sense that demand for December will be a lot higher compared to the March quarter. So the percentage change isn't as big. But what would be interesting is that the next peak season for alcohol is the end of financial year. So that should be really big as well. Clothing and footwear have increased by 0.5%. Now, housing doesn't make sense to me. I don't understand why the percentage change is 0.1%, just because we all know how much housing prices have appreciated, not to mention rent. So to see such a small percentage change, part of it, I wonder if it's because of all of the different grants and different stimulus packages that the government have implemented for housing, and people don't have to pay the rents and people can't kick tenants out, so on and so forth. I wonder if that have caused the percentage change to be quite small. So this is one of the reasons why I am a lot more curious about what happens in the next quarter, because when all of those things phase out, then we should see a clearer picture of what's actually happening in housing. But at 0.1%, it's laughable. For furnishing, household equipment and services is minus 0.2%. I should probably dig into that a little bit more.
health and transport, that's interesting to me in terms of the percentage change. Health has always been pretty big, especially during the pandemic. But transport, maybe it means that people have finally started to head out a lot more. So a lot more demand for both personal transport and also public transport. The rest is pretty straightforward. Communications have gone up by about 0.5%. Recreations still haven't quite picked up. And I think that might change in the next quarter or the quarter after that.
So I want to wrap up my thoughts on the low inflation rate from a retail investor's perspective. The bottom line is that inflation rate is low, but I personally don't believe that tells the entire story. I am more of a believer that after all of the different grants, stimulus have phased out, next quarter's inflation numbers should be more reflective and higher resolution of what the economy, how it's actually doing. Now the thing is, because inflation rate is low, it's giving license to the RBA to continue its bond buying program and keep interest rates really low. Because of the way that the RBA is buying the bonds in the open markets from banks, pension funds, we don't actually know whether that money will eventually make it into Main Street's hands. And if it doesn't make it to Main Street's hands, then that could be a reason why we're not seeing more inflation than we're supposed to. If you're confused about inflation and what the RBA bond buying program actually means, then I'll suggest checking out my inflation crisis video next, because I explained that in detail. For retail investors like me and you, it doesn't change the fact that we should continue looking for great companies that allocate capital to at a reasonable price. A bad investment is still a bad investment. It doesn't really matter the environment. I'll talk more about whether we are in a speculative asset bubble in a future video, but if you do want to be notified, just make sure you subscribe to me and click onto the bell so that I can tell you when that video is live. So thank you for watching this video all the way to the end. If you want to support the channel, not to mention access to additional content pieces and be part of my fortnightly Q&A, consider supporting the channel via Patreon. Nevertheless, if you have learned something new, remember to gently smack the like button right there, subscribe to my channel so that when I release future videos, you be the first one to know. Until next time, my name is David. Otto will always do the honors and see you very, very soon.